Received a notice from Income Tax Department? Don't be scared. I am Bhoomi Panchal and I am a company secretary by profession and I am working at ASSESSEMENT company, which is a chartered accountant firm based in Ahmedabad. Today I am going to take a topic on assessment procedures under the Income Tax Act 1961. I would like to thank CA Jigen Shah for giving this opportunity to me to present on this topic and who is a mentor behind this session. So what are the topics which I would be covering today? Topics are assessment procedures, old assessment procedures, how to draft reply to a notice, various sections under which assessment proceedings are being taken off, high pitch assessments, agreed by the order passed by the assessing officer, then you may file appeal, and new assessment procedure. So we would start with what is assessment procedure. Every person has to file a return of income to the Income Tax Department. The process of examining this return by the Income Tax Department is known as assessment. It is a process of determining the tax liability and recovery of tax. Now, I would like to say that there were two types of assessment proceedings carried on. One was under the old scheme and one is under the new scheme. I would like to give you brief about the old assessment scheme. Notices were issued by the assessing officer through speed post and emails, upon which the assessee would be replying with relevant information and has to submit his documents physically to the Income Tax Department, and further the notices were issued based on the discussions of the assessee and the assessing officer. There was a huge manual intervention of the humans, and harassments and corruptions were going on between the assessee and the assessing officer. Orders were passed based on the settlements and understanding between the assessee and the assessing officer. Now, before taking up any assessment proceeding case, one should know the basic sections under which the returns are being filed. Now, various sections to be known. First section is section 139. This section relates to the return filing section. Under section 139, there are various subsections. Number 1, 139 subsection 1 is related to the normal return. This return has to be filed by a salaried person or a non-audited case before 31st July, and audited cases returns are to be filed with, on or before 30th September of the year. Now, coming to 139 subsection 3, it is related to the loss return. It is mandatory to file a loss return. Yes, it is mandatory. To carry forward any losses, we need to file a return. Otherwise, next year we cannot set off this loss against the income. Now, section 139 subsection 4 is related to belated return. What is a belated return? If the return is not filed within the due date, then we can get a chance to file after the due date with a late fee prescribed under section 234F of the Income Tax Act. 139 subsection 5 is related to the revised return. What are the cases where we need to revise the return? If we have provided wrong bank account number, or there is a income reflecting in the 26AS and we have not shown that income, or we have left out any expenses to be claimed, then we can file a revised return. Now, coming to section 139 subsection 9, which is related to defective return. When defective return is to be filed, when you receive a notice from the Income Tax Department saying that there were errors, your income in 26AS is showing more and you have shown less income in the return, then you need to respond to the notice within 15 days from the date of the receipt of the notice. Otherwise, your original return would be invalid. Now, coming to section 142 subsection 1, which is related to notice issued by the assessing officer to the assessee to file his return. This notice is received when the assessee has not filed his return in any of the years or for a particular assessment year. And last section is section 148, where the income has been escaped in the any year, then the AO may ask you to file a return under section 148. Income return filed, income tax return filed. Then what's next? Income tax has to assess this return, and it will pass an order named as intimation. Now there are various sections under which the notices can be issued by the assessing officer. Number 1 is 142 subsection 1, which relates to calling for information or filing of return, or for assets and calling for information of assets and liabilities held by the assessee. Now section 143 subsection 1 is the intimation order passed by the department. It says that either your original return has been accepted by the department, or it has been or there are certain flaws which you need to correct. The department would be raising the demand, or either would be issuing less refund, depends upon the case. Now there is a section 143 subsection 2 which says that scrutiny notices. There are two types of scrutiny going on: limited scrutiny and comprehensive scrutiny. Section 143 subsection 3 is the assessment order passed for the notices issued under section 143 subsection 2, and the last is section 139 subsection 9, which I have already discussed above, which is related to defective return. Now what is the time period under which these notices are being issued? Now coming to section 142 subsection 1, there is no time limit prescribed under the Act that the assessing officer has to give notice within this time. But when the notice is received by the assessee, it has to reply within the given time frame. Now section 142 subsection 2A says that notice for special audit of books of accounts. At any stage of the assessment proceedings, the AO may call upon to hire a third-party chartered accountant to audit the books of accounts of the assessee. All the costs would be borne by the government, and the CA would be hired by the government only. Now, section 139 subsection 9, as discussed earlier, it is related to the defective return. The response has to be given within 15 days from the date of receipt of the notice, otherwise your return would be invalidated. Now, coming to section 143 subsection 1, it is just an intimation from the department that your return has been processed. Either the demand may be raised, or the refund may be issued, or it may accept the original return which you have filed. But you may receive a notice under section 143 subsection 1 subclause A saying that there are arithmetic errors or incorrect claims, and necessary adjustments would be made if you have not responded to this notice within 30 days from the receipt of the notice. Now, section 143 subsection 2 says about limited scrutiny and comprehensive scrutiny. There are chances that the assessing may convert limited scrutiny that he had taken up for a particular case to a comprehensive. That comprehensive means he will now scrutinize whole books of accounts. Now, what is section 148? It is relating to the income escaped a particular assessment year. Now, income escaped assessment year in which you are having less than 1 lakh, then a notice within 4 years from the end of the financial year can be issued, and income escaped more than 1 lakh, notices can be issued within 6 years from the end of the assessment year. Now 143 subsection 3 and 144 are the sections under which orders are being passed related to the notices issued under section 143 subsection 3 or 147. If the assessee is aggrieved by the order, then he has to file an appeal within the 30 days of the receipt of the order. 147 means order passed for the income escape from assessment. The 147 and 148 are correlated. Under section 148, you will be receiving the notice to file the income tax return, and under 147, the order would be passed. Within 9 months, the order has to be passed from the end of the financial year in which the notice was received, if the notices are issued before 1st April 2019. The limit has been extended to 12 months after the notices which are being issued from 1st April 2019 onwards. What is section 154? It relates to rectification. Once the original return has been filed, and if there is any mistake after the order has been passed under section 143 subsection 1, then we may get a chance to rectify our errors if there is any demand raised by the assessing officer. So we can file the rectification, but rectification can be filed up to 4 years from the end of the relevant assessment year. Now, section 156 is just a demand notice for the orders passed under section 143 subsection 3 and 144. Now coming to section 245, I will give you an example that if for the assessment year 2019-20, I am having a refund of rupees 20,000, and for the assessment year 18-19, I am having and a demand is being raised of 10,000, then I would be receiving a notice for adjustment of this 10,000 demand against the 20,000 refund. So net refund I would be receiving only 10,000. But if I am not agreeing to this demand, then I may have to reply to the on the income tax portal with relevant documents. This is the notice which we receive normally under section 143 subsection 3. Now, how to respond to the income tax notices? First of all, whenever you receive a notice, first thing you need to check that under which section the notice has been received. Whether the notice is being issued within the time limit or it is a time barred. If the notice is being time barred, you have to visit the income tax department with the relevant information that this notice is being time barred. Now, the client won't be aware that the notice has been received, as the returns are being filed by the other persons. Client is not filing the income tax returns. So we need to make understand the client that this is the reason for selecting your case, and relevant information we need to gather from the client only. If the client is saying no, we need to explain him and make him understand that we need to provide the information to the assessee as they are having all the excesses. Once all the informations are being received, then proper reply to the notice has to be given with proper judgments and quoting various sections. Your reply has to be self-explanatory, as there is no human intervention in the new scheme. Now there are certain recent high-pitch assessments going on. I would like to share one example of best judgment which we have faced. That is, there was an assessee who was carrying a business in the name of the HUF, and he was the karta of that HUF, and HUF was filing the income tax return as a proprietary concern, but the individual who is the karta, who was not earning any income, has not filed any income tax return since many years. So he received a notice under section 142(1) for filing the return, but the assessee didn't reply to that various notices, and the case was selected under the best judgment, and the assessing officers had taken and there was a case that during the cash demonetization period, the assessee had deposited the cash, and the case was selected that there is an unexplained income. So assessing officer had added all the credit entries of the bank side. This is very harsh to the assessee, as it was amounting to rupees 2 crore, and total additions were made amounting to rupees 2 crore. And upon this, the tax was being charged under section 115 BBE, which approximately comes to 78% of the 2 crore, that is it comes around to 1 crore 80 lakhs rupees of tax. This is very harsh and bad in law, that the assessing officer is not considering the facts which are provided by the assessee, and due to the time bearing and passing of the order, he passed the order in haste. Now these are the various penalty sections related to the assessment procedures. These are the various penalty sections related to the assessing procedure. The penalty may be amounting to rupees 10,000, and it may go maximum to 300% also, depending upon the case of the assessee. Now what if I am agreed by the order of the assessing officer? Yes, I am having a redressal framed by the law that I can file an appeal to the CIT appeals. It is a mechanism provided by the law to challenge the lower authority before the higher authorities. Assessee himself can file the appeal, or through authorized representative he can file the appeal. Now what are the authorities of appeal? First is the CIT appeals, then it is Income Tax Appellate Tribunal, then High Court and Supreme Court. Now orders under which the appeals can be filed. If we are agreed by the order passed under section 143 subsection 3 and 147, we can file an appeal to CIT within 30 days of the receipt of the order in form number 35. This is form number 35, in which we need to provide various details such as assessment date on which the assessment order was passed, document identification number, and grounds of appeals and facts of the appeals. For filing an appeal, we need to pay appeal fees, which is maximum 10,000 rupees, depend upon the case. Now what are the facts of the appeals and grounds of appeals? Your facts of the cases should be self-explanatory and it has to be in detail. Try to avoid writing huge paras, and it has to be a self-explanatory, and it has to be clear and to the point, and it has not to be in a form of a story. Now grounds of appeal. Each ground on which assessee is agreed by the order should mention separately. It should be concise and to the point. Stay of demand. There are chances that when the assessment order is passed and due to the penalty, due to the demand of tax, the assessee is not in a position to pay the tax at that moment while filing the appeal. So the assessee has a redressal to request the assessing officer to grant a stay of demand and make an application to the assessing officer. If the assessing officer finds fit, then he may put a stay on a demand. Now what is a new assessment scheme? To overcome the flaws in the old scheme, government came up with the new scheme known as e-assessment scheme. What is a faceless e-assessment scheme 2019? E-assessment scheme 2019 was notified by the government on 12th September 2019. This scheme was inserted into the Act via section 143 subsection 3A and 3B of the Act, and it empowers more on efficiency, transparency and accountability. By eliminating the human interface, by optimizing utilization of resources, introducing a team-based assessment. Now what is the structure of e-assessment scheme? There is a National E-Assessment Center headed, which is located at Delhi and which is headed by the Principal Chief Commissioner of Income Tax, and there are under National E-Assessment Center there are 8 regional e-assessment centers which are located in the metro cities and big cities, and which are headed by the Chief Commissioner of Income Tax. Under this there are pool of people working. Now how does the e-assessment scheme will work? There is a National E-Assessment Center, and there is one side a taxpayer and one side there is a regional e-assessment center. All the communication between the taxpayer and the regional e-assessment center would be done through a mediator, which is a National E-Assessment Center only. Now there are various functions of in a national assessment center. That is, it would be drafting notices. It would send notices to the assessee, then assign the case to the assessment unit, and review the assessment order passed by the assessment unit and send it to the review unit. And these are the functions of the regional e-assessment center. That is, the assessment unit will take care of analyzing the informations provided by the assessee. Verification unit will conduct inquiry, examination of books of accounts. Technical unit will provide legal advices and data analysis. Review unit will review the draft assessment order passed by the national assessment unit. So this is the topic for the today. I would like to say that while opting for any assessment proceeding, we should change the mindset of the client that yes, this is the case has been come up. We need to fight against this case, and we need to change the mindset of our team also, that how we need to proceed in this new e-assessment scheme era. So thank you for your patience listening.